Hey everybody, Real Estate Ninja here. I hope you're doing well. We're going to talk about what's going on. Powell just spoke. There is a fake out happening, and I'm really excited about it because why is there a fake out? Everybody is expecting to see the Fed pivot. They're not going to. If they do, it's a trap. And I just laid it out on the Economic Ninja channel. I may cover it again here a little bit, but let's start with a story out of Zero Hedge. And then I'm going to share with you, I actually worked on a course, a new lesson for the real estate crash course, how to prepare. I just got part of it back from my, editor. Sorry, Juan, he's probably watching. And I'm going to play a little bit, like, 30 seconds for you to show you what I'm talking about, because today gold has hit an all-time high. All right. Let me know down below if you own gold, hashtag gold for me. And if you got gold stocks, let me know, and let me know how those are doing. It's interesting how those are reacting to the price volume. But let's talk about Jerome Powell's comments and how the market has got it wrong. Powell comments send everything soaring. Gold hits all-time high. Dollar plummets as market prices in rate cuts. Remember, we don't have a falling stock market right now. We don't have a lot falling other than government lies about CPI or inflation. Okay. After November's furious melt up, which saw the S&P rise by 9%, the NASDAQ was up even more ludicrous, 11%, which was the best November for the stock market since, guess what? 1980. Think about that, 1980. What was the Fed fund? Let's do this really quick. I'm doing this live, and I'll show it to you, I promise. Fed funds rate, 1980. Now I'm going to show you. So the stock market didn't have as good of a November since November of 1980. So let's check this out. I want to find the website from the Fed. We'll go to the St. Louis Fed or the St. Louis Fred, and let's go to November of 1980. I'm going to get it over my thing right here. Oh, it's so beautiful. Oh my gosh, it's so beautiful. Stand by, wait, I'm not done yet. Give me a second. It's very hard to get the cursor right on November. Come on, November, come on. Oh gosh, don't touch it. Right, it's awkward. It's so hard to do it. If you guys know these Fed charts, come on, December, January, stop it. Stop playing with my emotions. It's awkward. Oh, I was just on it. All right, whatever. September. All right, here we go. Sorry, it's awkward. It's live. Usually the Economic Ninja is a little goofier than this. All right, so see right there where the chart is? Okay, that's September. September of 1980. Rates were pretty low. Now, this exactly plays into why I made a very special lesson for the how to prepare for the real estate crash. That lesson is coming out in around 7 or 9 days from now, depending on how long it takes Juan to finish it. Juan, don't tell him. Okay, so here's the thing. All right, see down there where that is? You notice how interest rates right before were really high and then they dropped? All right, that is when we had the best November on record. Here's October of 1980. See it starting to go up? Interest rates are starting to go up. All right. Then we had the peak. The peak was January of 1981. All right, so here's the question, or here's the whole point. The stock market was doing good right then. Interest rates were screaming up. Do you know what wasn't doing good? Real estate. And what happened was just a mere 12 months later, interest rates kept spiking, and took out the real estate market. Many people lost their homes. They don't talk about this. As a matter of fact, it's pretty much wiped out of economics textbooks. But if you've ever heard of someone called Carleton Sheets, has anyone heard of Carleton Sheets? Type 1 if you have. Carleton Sheets was pretty famous by selling these cassette tapes of how to buy houses, no money down. He became famous because in the late 70s, early 80s, there were all these no money down deals because the Federal Reserve had spiked interest rates, like I just showed you, where the stock market was doing amazingly, right? Check this out. I'm going to come up really quick here. Historical Dow chart. I'm going to show you something. Dow Jones. Now, the reason why I'm showing you this, and you're going to give you a little mini lesson from where we were in, I'm going to show you 1999. Boy, you can't really even see it. It's such a blip on this chart. It's going to be hard for me to grab it. But the point being is that when interest rates spiked, the Dow fell. And because you can't see it, and I'll give you an example. Here's back here, here's where just Google marks it. Look at right down here. That number right there where it starts, where they started tracking it, that's December 2nd, 1983. The chart doesn't even go back, and I hit max. But my point being is that the Dow fell significantly because when interest rates spiked, real estate collapsed in price. A lot of people lost their jobs. Companies went out of businesses. They don't want to talk about that. Well, Carlton Sheets made all these books. Well, when I started buying real estate in 2001, that's how I started buying No Money Down. I went and learned from the gurus that were making the books back then because they knew what high rates did and then what happened in a subsequently when rates fell. Okay, that's how I wrote my course, because it's so important for people to realize from someone that's been through it. There's today, and the whole internet is full of people, gurus, that have bought their first house in 2010, 2012, when it was easy and it was cheap and there was nobody to fend off, you know, and all they've known is super, super low rates. They don't know what happens when rates go up. That's why they're all telling you to buy right now. I know some of them are telling you to buy as they sell. They're very famous and they would sue me if I told you, but it's true. They sold their house on a hill. If you know who that is, put it below. All right, so here we go. The story that I want to get back to is about Powell, and it's very, very important. And again, thank you. This is the economic, it's not the Economic Ninja channel. It's my brother's channel. I am the better looking Brohawk. Please hit the subscribe button. It says, all eyes are on Jerome Powell today to see if the Fed chair would say something to stem the surging stock market tide following the month, which saw the biggest easing in financial conditions on record, equivalent to nearly 4 rate cuts. All right, I want to reread that because we need to get this into our mind. Have you ever heard of the term irrational exuberance? It's pretty famous. A Fed chairman, put it down below if you know before I say, said it. It was before Ben Bernanke, because he's a total tool. Point being is that Alan Greenspan, hey, Alan Greenspan's actually here. So Alan Greenspan actually talked about irrational exuberance. When the stock market was going crazy and all this stuff, he's like, I don't know if you know this, but we got ourselves a good old-fashioned plan for you. And so what happened was, just this month, and let's do this. All eyes were on Powell today to see if the Fed chair would say something to stem the surging stock market tide following the month, this last month, which saw the biggest easing in financial conditions on record, which was equivalent to nearly 4 rate cuts on a percentage basis. It's a big deal. We got the answer shortly after 11 p.m. Eastern, when after what seemed to be otherwise balanced remarks with a dose of hawkish comments, this is what he said: it would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance, or to speculate on when the policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so. So let's break that down. What he's telling you is that do not stop betting on rate cuts. We have said multiple times, further for longer, or higher for longer, higher for longer, higher for longer. Like, what happens when your kids are like, Dad, can I get some candy? And you're like, no. Dad, can I get some candy? No. Dad, can I get some candy? Finally, it's like, look, what do you want me to tell you? You want me to tell you something else? Like, I'm just going to magically pull $1 out of my pocket? How else do you want me to tell you that you're not going to get candy? Jesus, stop asking me. Or if you're someone else who's like, fine, here's the candy, I don't care. Point being is this. This is Fed's moment of like, what else do you want me to tell you? So, like he says, we are prepared to tighten policy further if it becomes appropriate to do so. So here's the question. Has unemployment went down? It has, if you really read through the numbers and you see that there's more part-time jobs than full-time jobs. Has the stock market gone down? No. Has real estate come down to where people are going, hey, I can afford a piece of house? It's gone down, but not to where people are like, hey, I can afford, oh, I guess I can afford a piece of house. I'm going to buy the tongue of a trailer hitch of a park model. But my point being is, no, that hasn't either. Has food and energy gone down? No. Okay. So to the bright individuals, they would go, I don't think that the Fed's going to lower rates. Where all the other tools are out there going, they're going to lower rates so we can speculate more. That's not going to happen. All right. Offset, he said, by some dovish statements. Check this out. He goes on to say, the strong actions we have taken have moved our policy rate well into restrictive territory. This is the ninja. No, duh. It's like the most restrictive, one of the most restrictive points in history. Just so you know, Fed's never done like this. It's never done this, like this hockey stick, okay? Meaning that tight monetary policy is putting downward pressure on economic activity and inflation. Now, I have been reporting on that for well over 2 years as the Fed started this rate hiking policy, and it is working. There is definitely slowing. There's not enough stoppage in economic activity for the Fed to now do an about face and turn around. He says monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening have likely not yet been felt. He's telling you right there, he is not planning on lowering. So this is important because today, everybody's expecting it. Check this out. Powell points to how the Fed's past tightening moves will continue to have an impact on the economy. The full impact hasn't been felt yet. If anybody thought the Fed wasn't finished raising rates, his prepared remarks today sure put a fork in it. They're all done. Now that's a quote from Bloomberg. Okay, Bloomberg, I don't know if you know this, how this works. You know that guy, Jim Cramer? Hey, type 1 if you like Jim Cramer. Type 2 if you think he's a total tool. I'm typing the 2 right now. I'm just typing 2. I can't type 2. Let me get in the live chat. I'll type 2 myself. Okay, these guys are pundits, and they like to sell you stock and things while they're selling them to you. Then, when it's all crashing and you're panicking, they like to buy them back. It's actually how the world works. I hate to tell you that. If you think that's doom and gloom, I got a safe space for you brought to you by a piece of chalk. I don't have it in my... Man, I feel like the economic ninja today. Haven't even had any coffee. Point being is this. That's what Bloomberg said. Well, if you listen to what Powell said, he might as well have just been saying, I'm going to lower rates right now. And I'm Bloomberg. You should listen to me. That's what they were saying. Powell didn't say anything like that. So they're prepared to go tighter. As a matter of fact, they've been saying higher for longer, higher rates for longer, higher rates for longer. And there's just been a bunch of idiots out there going, he doesn't really mean that. All right. So let me bring you to where, so today, what happened? Dollar sells off. Dollar sells off, and gold goes to an all-time high. Now, I made this video. I'm going to show you just a clip of it. I'm going to play it for a second. You're going to get to see what this new lesson is actually being edited right now, and it's going on the how to prepare for this real estate crash, because I believe this is such a vital point to learn. So let's go do this real quick. Expensive. Now, answering that question is where the gold, the housing comes from. It is quite useful, and there's no dollar component in the ratio itself. Inflation concerns drop out, and we are left with the value of the two most popular tangible investments relative to each other. Can you hear it? Let's go ahead and pull up the gold versus the Case-Shiller Home Price Index. I think this is very important. So first I want your eyes to go to where we were in 2006, where they have that little spot saying 2006. You'll notice that the price of gold was not near an all-time high. As a matter of fact, you saw home prices peak out. The Case-Shiller Home Price Index actually so not professional up into 2006. And come on now, let's get to it. Get to it, Ninja. Was starting to, consequently, as years went by, here we go. Gold price started to trend down. You see that as the gold line's going down into 2015, 2016, you see the housing market start to increase. All right. Now, this is where so here's the point. This is the whole point. That new lesson, that bonus lesson, is coming out like in a week, 9 days, something like that. And then I have one more bonus lesson coming out in January. Again, the whole course is being shut off to the public totally January 1st, okay? This is the last time anyone can get in because we're going somewhere totally different this next year. Point being is this. Everybody is betting on gold because they are betting on him dropping rates. The only way you get a rate drop, and it's going to be very slight, and I showed you in this chart, this was a head fake. This is so easy to see, it's insane. All right, look. Early 70s or mid 70s, where they, right here, 1973, where rates topped and they did a short little drop, boink, and then pow. That was a bad surprise. They come up here, they start to drop in a very short amount of time, bow, they come back up. Look, they even had another head fake where they lowered. These are times when people lose houses and foreclosures start, all right? You can see throughout very few times, it was this time, there was one, Where was it? Oh, it was down here where they immediately dropped and they had to raise again. And then you have one more that's very important right here. 1998, where they started to drop and then they popped again. Now, I believe that that's coming this next year, but it's going to be for political reasons and it's going to fake a lot of real estate investors out. And so I really wanted people to understand that because I think this is a time like no other. And again, if you look where we are right now with that Fed funds rate right here, look at how nice and tall that is. That's nice. I don't think we're anywhere near where we have to be to break the economy. There's way too much credit available. Even though we're at all-time highs for student loan debt, credit card debt, and so much more, there's still more avenues that people are going to be grabbing. They're grabbing onto adjustable rate mortgages right now. They're grabbing onto HELOCs. People are trying to find money all different ways. And so that's going to exacerbate this issue. And that's what the Fed wants to stop. We are seeing people, again, the last couple of years, we've seen more $1,000 a month car payments than you could shake a stick at. People just, they're not that bright. That's why they get into problems like this. Type 5, or just say, I do, if you know somebody that's not that bright when it comes to finances. So that's why we want to be here to pick up the remnants. So we've got to be patient. We've got to come at it from a really big vantage point, a really wide angle lens, really, be up that 20,000 foot view. And so I believe you're going to see a head fake. And again, I'm not a buyer of gold right now. I'm an excited holder of gold because I've just made money and I know you've made money. Let me know if you've made money down in gold. I know a lot of you bought it. These are exciting times, but yet as exciting as they are, a wise man doesn't get all excited, all mimbly-bimbly and jumping around. He's always waiting for what's coming next. And what's coming next, I believe, is a quick fake out, and we're going to be able to take advantage of that. All right, with that being said, I'll put a link down to the real estate crash course. If you want it, cool. If not, no worries. It's done as of January 1st. Not everyone's locked out. If you're in, you're in. All right, with that being said, the Real Estate Ninja is out.